Good afternoon, everybody. We have a great panel, and I appreciate it's getting late in the afternoon, but I'm genuinely excited to listen to this panel. We have some experts from different parts of the world. So we're going to have 3 questions today. Before that, we'll get into introductions, and I think the standard here this afternoon has been very high, so we'll try to exceed it. So I'm the moderator today. I have the pleasure of working with these fine folks. I'm the CEO of AlgoQuant, which is a global asset manager and a family office, and we're a quantitative fund. So with that, if you would mind just doing a minute on each of you, and then we can get into it.
Sure. Hi, everyone. I'm Alison Mangiero. I am the Chief Strategy Officer and Head of U.S. Policy at the Crypto Council for Innovation. We are the premier global digital alliance that represents leading companies in the digital asset space. We have offices here in Washington, D.C., in London, Brussels, and Hong Kong, and we're focused on responsible innovation and education for regulators and lawmakers.
Good afternoon. I'm Moad Fahmi. I'm the Chief FinTech Officer at the Bermuda Monetary Authority. We are an integrated financial services regulator. Bermuda is a small island in the North Atlantic, about 600 miles due east of North Carolina. For those that haven't been, you should come. It's beautiful. So not only do we have beautiful beaches, but we're also a very large international financial center with the main industry being insurance. There's several $1 trillion of insurance that is deployed from Bermuda, especially reinsurance. That insures pretty much all of the U.S. Coastal area. But yeah, pleasure to be here.
Amazing. Well, hi everyone. I'm Marianela, Jaca, VP of Institutional Sales at P2P.org. And I'm leading discussions with institutions to understand where they are in their digital assets journey. So a lot of the focus is on education, but also helping them understand how to get on chain. Secondly, is also making sure to understand clearly what are some of the gaps, and most importantly, what needs to be in place in order to move capital.
Great, thank you guys. So we're going to our first question now. What is compliant yield? And I guess just to frame that, there's a lot of institutional capitals looking to be deployed into space. What is going to make them able to do so? And how do you guys view compliance in this manner?
Yeah, so maybe just to take a first cut at that, and when we think about compliant yield, I'll say first of all, I focused a lot of my career on staking policy and staking issues, and so when I think about staking in particular, I'm still a little bit uncomfortable about the word yield and the way that we throw it around, but I'll use it today for these purposes. I think we were really lucky to finally get some SEC staff statements and guidance last year that could give industry comfort that staking, if it was offered in a particular way, was not a securities offering, so very helpful. Also last year had a revenue procedure coming out of the Treasury Department, which gave us some guidance on how to structure ETFs, right? There were grantor trusts that house these ETFs, so a little bit more certainty on that side. So I think the more products that people are trying to bring to market, the more it's kind of forcing conversations around what that needs to look like and what the regulatory framework that we need in order to get this right is. So I think we're going to see more and more of the maybe more technical aspects of this be more well understood. I think for things like lending, that's kind of an area that's pretty well understood at this point. And so what's compliant and what isn't, there's kind of clear lines there. But I think even getting to like things like protocol staking, liquid staking, restaking, slowly but surely, we're getting there.
How about from Bermuda?
Yeah, in Bermuda, we don't regulate products themselves. So, we don't say this is how you should be generating yield or this is what compliant yields look like. What we regulate is financial institutions. So we look at the underlying infrastructure that the institution has built to support the yield, the risk disclosure that go along with that, the governance mechanisms, the risk management framework. So I think we're of the view that as long as entities understand and mitigate their risks properly, I think they can be free to innovate. And this is what has made Bermuda successful in other areas, including digital assets.
Yeah, so I'll start off with what compliant yield is not. Compliant yield is not opaque. Compliant yield is not something that you can outsource and assume that the risk will be gone. What compliant yield is, it's controlled, it's auditable, it's transparency for you to be able to get a sense of where these returns are coming from. Now, I think we've done a really, really good job being able to define the stable coins, but everything around it needs a lot of clarity, right? Because yields is not created equal. You have staking versus lending. So we need to be able to differentiate the difference between the two.
Very cool. And just a side question for you. If you don't like the word yield, what would you replace it with?
Well, it's interesting because for years I was pushing people to use rewards in the context of staking. Now that has become an incredibly loaded term recently, especially in the context of stablecoins and stablecoin rewards. So there is no perfect term. I think what we need to be careful of is that people are not conflating yield that comes from different sources and that they understand the nuance. And to your point, they understand where the yield is actually coming from and that there is that transparency. So maybe there is no perfect word, and I guess we've arrived here at the Digital Yield Summit, so I need to accept it at this point.
Okay, fair enough. Okay, so maybe let's change gears a little bit. And let's talk about what's actually blocking the capital. Maybe we can start with you.
Sure. So what's blocking capital today would have to be transparency and this belief that regulation has to be fully scoped out before participation. Now, within the institutional space, if there isn't clarity to defend the risk that you're taking, it's not really going to go anywhere. So a lot of transparency and also ensuring that we are enabling the ability and the agility of the essence of Web3 in order to be able to continue building and becoming really obsessed with this infrastructure that's intending not to replace, but to enhance and modernize the transaction financial services.
Thank you.
Yeah, I think I have to agree 100%. You would make a fantastic regulator, by the way.
Thank you. We'll have some talks later.
So I think what makes institutional adoption difficult is oftentimes the lack of explainability, and sometimes it will come from some of the industry jargon that is not always clear. So having a clear understanding of, well, what is yield, what are we doing, because these institutional investors usually have an investment committee and auditors and insurers and a lot of stakeholders that they need to report to and say, well, this is what we're doing, this is why this is prudent, and this is how we're going to continue monitoring the risk. But if they can't explain that, of course, they won't be able to do it. So there's, as an example, there's insurers in Bermuda that are building on-chain insurance. So they're locking capital in a smart contract. They need to generate yield to do that. But when they come to us and say, well, we're not exactly sure, well, we're going to put a lot of mutations on how the levels and the amounts that they're going to be able to do that. So they're going to be able to do it in a sandbox environment. When it comes time to scaling at institutional levels, I think these questions become paramount. So there needs to be some explainability, but there also needs to be resilience at scale, right? So you need financial resilience, but also operational resilience. So if along the chain, let's say the custodian is not reliable or is going to fail at times, then this is not acceptable. So it's not only the entity that's doing the yield itself, but it's also all along the chain of services that go along with that.
But maybe just sorry, before we move on, as a regulator, this is quite innovative. How do you get comfortable pathfinding in this space?
Well, we use our sandbox a lot, right? So we've had companies that have graduated from our sandbox, but whenever, again, we don't block innovation, we're usually going to put some limitations when we don't understand it fully and when the risks are still novel and we're unsure how to mitigate those risks. So we're going to put some cap and we're going to, use our regulatory craftsmanship to design conditions and limitations on the license so that the entity can test its product. And then when we have some understanding of the level of risk, then they can scale further. So we have like a 3-tier sandbox, which is like very test environment, what we call the modified license, which allows scaling up, and then full licenses. And compared to a lot of jurisdictions that have sandboxes that have seen no action at all, like we've seen several companies graduate from just proof of concepts to large scale companies.
Awesome, please.
Yeah, I would say it would be nice to actually have a sandbox to speak for my country. I think, look, I agree in terms of the importance of education, being able to explain these things, not use jargon. I disagree that we don't need regulatory clarity. I think we absolutely need regulatory clarity, especially here in the US. I think we have made some strides. Genius passed. This has been said over and over today with the stablecoin law that was passed this past summer. We are in the final innings in terms of the market structure legislation. The time is now to get that done. I think if we do not want to cede our leadership here in financial markets in the US, we absolutely need market structure passed. And I also think tax clarity is incredibly important. People don't talk about this enough. I think you could have market structure, you could have a stablecoin law, but if you don't have clarity on the tax side, or even to some of the folks who were on the last panel, some of these accounting issues, if those things are not worked out, then I don't think that you're able to do this. So I think it's actually incredibly important. I think it's the whole ball game.
And if I was to ask you guys for like a timeline for the next unblock, what would you guys say?
The next unlock in terms of capital?
Yeah, just like when we actually see, I guess, another wave of institutional capital coming in.
Yeah, I mean, look, not to reiterate a little bit what I just said, I think if we can get this market structure legislation passed, we move into rulemaking, we have a shot for that to happen pretty quickly. I think if that doesn't happen, I think institutional capital is going to remain on the sidelines.
Yeah, I would say that if we're strike the balance between ensuring that the consumers feel protected, feel safe, as well as ensuring that we are enabling the essence of Web3, we're going to be able to bridge that gap.
I think for the next cycle as well, it's, there's some challenge remaining with regards to international collaboration amongst regulators. So if we live in a very fragmented environment, even if you're a large institution and even if there's regulatory clarity in the US, but there's not regulatory clarity at the global scale, there's some difficulties there. So certainly the work that the FSB and the BIS and IOSCO are doing is very critical. And they've been much better at understanding what really is going on and looking under the hood and being acceptive that this industry is here to stay and for the right reasons. I certainly appreciate that in the US, within the two legislation, Clarity and Genius, there are some provisions for equivalence and comparability with other regulatory frameworks. I think that's a very good first step for having this global adoption.
Yeah. But yeah, these are big ships that take a while to move, right? So it's important. It actually sets us up for the next question. And so I guess when we look at regulation and where it's shaping the capital and how it's moving, how would you guys look at the fragmentation versus the convergence? And I guess maybe we can start with you as a regulator. What's most interesting to you right now, and how do you think it's adapting?
You mean in terms of international collaboration for regulators? Or?
You have the mic.
Yeah, well, especially for yield, there's a paper that's been published by a friend of mine, Peter Goodrich at the FSB, just recently, a couple of weeks ago. It was published under the BISO Bank for International Settlements, Financial Stability Institute, and they look at the crypto sector from the lens of those that are vertically integrated, but they have special focus on lending and staking. And in there, they do highlight a lot of common risks that are in the sector. And certainly, these types of discussions and really focused areas become kind of key building block for regulators to design their regulatory framework around these key issues. But there first needs to be an understanding of what these issues are. Unfortunately, the failures of Celsius and others in 2022 was detrimental to this, but it also served as a building block for, maybe we need to do something, and these are the risks and how they're materializing.
Yeah, I would say with fragmentation, this directly impacts institutions, right? When you have fragmentation, when you don't have the ability to defend the risk, then it's very difficult to be able to move into that allocation. So taking a step back and taking a look at how do we remove that? Well, auditability, monitoring, being able to define structures and frameworks where we're able to define if something breaks, then who is it that we need to be speaking with? So a lot more clarity and a lot more framework to be able to push that appetite. And one of the observations that I've made is that the appetite is there with institutions. The desire is there, but it's mostly all of the different types of frameworks that allows to defend any risk that's taken when they go and have the meetings internally.
Yeah, but and to both of your points, I think some harmonization here is incredibly useful. So on the staking side, for example, I mentioned the two SEC statements, obviously here in the U.S. I'm getting my weeks confused, either last week or the week before. UK published their draft regulatory perimeter guidance. There, staking is treated completely differently. There is an exclusion, but only for node operators. If you put a front end on it, then you're not excluded. Here in the US, SEC issues a statement, front ends are not broker-dealers. So if you're running a business in all these jurisdictions and you're trying to keep up with this, right, it's incredibly complicated on the infrastructure provider side and on the tech side. And it's also complicated for these institutional allocators who are trying to make sense of being compliant across jurisdictions. So I think there is certainly still fragmentation. Hopefully we'll see some more harmonization. That's maybe a little bit of wishful thinking at this point.
Going back to your first point about education, how would you couple the two to, I guess, help us move forward with this?
Well, look, I think to the earlier point about Celsius and some of the failures, I think there's been a line that's been drawn directly from lending to some of the earn programs to then staking, when what's actually going on under the hood is in fact very different, right? And so there's a lot of jargon and a lot of people will get into the technical nuance, but I think at the end of the day, understanding the different risks and education surrounding what the actual risks are, depending what you're talking about, instead of conflating all of these things, is incredibly important. We at CCI, we sit down with lawmakers and regulators to try to have these conversations. We produce collateral and our own research to try to explain these things. So I just think, not to saying it over and over and over again, I think that's half of the game, but also having the research and data to back it up is incredibly important, because I think nuance is important here. And if we take shortcuts, which people are often doing to attract institutional capital, then you can get in trouble. And I think that's something to look out for.
Yeah, and to add to that, transparency, right? How do we offer transparency in the complexities? It should be where, right now I'll use an analogy, right? We get in our cars, we know exactly where we're gonna go, right? We open the hood, how many of us know exactly what's going on under that hood? It shouldn't be where this complexity is something that we need to be explaining or relaying to the end consumer. These complexities should be able to communicate harmoniously, but being able to provide transparency, clarity, and also a little bit of translation into the traditional finance to eliminate some of the jargon that, with all due respect, it's all new as well, right? Which we have to applaud that, the agility, the innovation that's happening in Web3 with a brand new terminology. But how do we close that gap and how do we bridge it is through the transparency that we provide in communication, all while removing a lot of the complexities and really focusing on the infrastructure that we're building.
Yeah, can I add? I think the education is not only on the consumer side, but when we think about institutions, it's all across the governance chain. So, our CEO, as an example, at the BMA, he knows how to code in Solidity. He learned by himself, and he likes to do it. He led a webinar for employees on how to code their first smart contract. At the board, we did a little exercise where board members had to acquire stable coins and then make transactions between themselves. And then they came up with questions you could see that, oh my God, this is transformative. We onboarded 15, 20 people in a matter of 10 minutes, and they were able to send money, without having a single bank account, or it was pretty amazing. So I think playing with the technology is a very good way to learn, but across the organizations, I think there's an important focus on, what type of skills do these people have? And that's true across committees as well. If you got risk management committees, investment committees, and on these committees, there's no one that actually knows about the technology or is that kind of crypto native. I think you have to develop that because it's difficult to comprehend otherwise.
Yeah, speaking their language instead of our language, I think, is incredibly important. And to your point, I actually remember sitting down in congressional offices and saying like, oh, I'm actually going to walk you through liquid staking, and just kind of showing them in the app on my phone, and then it becomes real and it becomes something tangible, to your point. So the more people that are doing that, I think the better.
Maybe someday in office there's crypto native people that,
Right.
that will help as well. So
Yeah,
I think
yeah, we need to
things will
stop
change.
boring acronyms that mean things in finance as well.
That would just be great.
It gets confusing.
Yes.
So in Bermuda, do you see some of the large traditional insurance companies getting interested? You mentioned an on-chain crypto native.
So banks, traditional banks are laggards because it takes time for them to adopt these new technologies. They're prudent and they have a lot at stake. Insurers, they're even more prudent than banks. Their expected failure rate is lower than that of banks, so that means managing capital very prudently and for a very long time horizon if you're in the life insurance space. So we see mainly new niche players developing. There's a lot of interest from the larger ones, but I think they're more in the stage where they're looking around and observing what's happening, developing their strategies, maybe testing with a pilot here and there. But they're still within the regulatory community, some limitations in terms of what the largest insurance companies can do, and that's fine because we don't want these insurance companies to fail.
Yeah, of course.
Their obligations to all of us. When they insure my house, I want to make sure they're able to pay. So
Yes.
I don't think Bitcoin would be a good asset
The
to
DeFi
secure my
risk
house
over
against.
your house insurance, I get that.
Yeah.
But no, there's a huge float there, and as a CIO, like that float's interesting, right?
Yeah.
So it's just as and when we graduate, that's potentially very interesting.
Yeah, but we see a lot of stable coins arrangements being locked in to smart contracts for parametric insurance. So parametric insurance is like, okay, if there's like rainfall or barometric pressure happening in this jurisdiction, then the capital is immediately released, and that's perfect for smart contracts. And within those smart contracts, there's stable coins that are locked in, but if they're locked in, then you need these stable coins to generate some form of yield because that's how insurance works. So I think if and when all of this large pool of capitals gets unlocked, I think there's going to be a very large demand for yield for digital assets.
Very cool. Any questions from the audience? I know it's Wednesday, but you have some great minds here if you want to ask a question. No, if not, I have some more questions. So I guess from your perspective, what do you guys find most interesting in your day-to-day? Maybe start with you.
Oh, I love this question. What I find most interesting is that every institution is in a different stage in their crypto journey. And so regardless of who it is and who's involved, there is appetite. Now, what I also find very interesting is that everything comes back to regulation. And so every stride that we make in regulation makes the conversation a lot more exciting. The second thing that I love is how much agility we have within the space, how much obsession there is from the builders creating technology that is far advanced its time. And the complexity around it, yes, we need to dilute that a little bit, but we have to really applaud the level of creativity that folks are getting really obsessed with this technology, with this infrastructure, and bringing and colliding all of these minds to be able to create something that is intending to modernize and enhance the financial services.
There's a gentleman that did a keynote earlier about AI and agents, and one of his slides was constraints is opportunity or something like that. And my job in the day-to-day is to put a lot of constraints on a lot of people. And I like to think that in some ways that enables them to build better businesses. So this is kind of what I find exciting. How do you create this environment where people voluntarily come to Bermuda, because most people is a choice, right? They can decide where they establish their business. They voluntarily come for me to put rules that they're going to abide by, but in some way it enables them and their customers. I think that's fantastic.
I would say what I love is that I work in perhaps the biggest growth fields in crypto and digital assets in the past few years, which is law and policy. I think, to your point, this has become absolutely crucial to getting this right. So I feel like it's very important to kind of focus on the nexus between the technology and the constraints that you just mentioned. But I think they're novel questions. They're almost all questions of first importance, and so it never is boring.
Okay, and we'll finish off on the final question. What will the next institutional allocation look like? Where do you guys think it comes from?
Sure. So the next institution allocation is not going to be one large trade. The next institution allocation is going to start off with a pilot. It's also going to be testing infrastructure. From there, we're going to have counterparties and define processes. And thereafter, we can move into a bucket where staking and yields are already included in the creation of the portfolios. And from there, then we can move into embedding into the fund, treasuries, and all of the products that we create for clients.
Well, I'm not sure where it's going to come from. I'm not sure it's my job to know. But I want to make sure that when it comes, and if it comes, it's going to be something that's sustainable. So,
Well, let me ask you then, do you find more inquiries now or less given a year ago?
no, there's definitely more. And some of the institutions that are coming to Bermuda are, we have like, of course, we have the large like Coinbase and Circle and Kraken, but we're seeing, some traditional financial companies that have been around for centuries knock at our door and say, hey, could we potentially do this from here? I think that's very indicative of what's to come.
Yeah, and maybe just to echo what you said, but from a different perspective, I think what's interesting for us here in the US, and I'm going to read off some stats that we just compiled and put out today from CCI. Though the US leads the world in terms of global financial markets, so 9 in 10 global currency trades use dollars. US equities make up 50% of worldwide market capitalization. The US has 4 times the number of publicly traded companies as China. But in the crypto market, $3.2 trillion market, 88% of centralized exchange volume was traded on non-US exchanges last year. 75% of stablecoin volume flows through foreign issued stablecoins. Only 19% of crypto developers are here in the US, and that is a 51% decrease. So I would just say, in terms of institutional capital, attracting that, though the US is leading in terms of global financial markets, we are not leading. We have ceded that leadership in the crypto markets. And the only way we're going to get that back is if we provide clarity on both the market structure side and the tax side. So I'm just going to leave that there. I think this is crucial.
Good. Great. Well, I've enjoyed listening to the vote. I hope you guys have well. Please, Ms. Allen.
Thank you.